Hi, it's Kam Brar here. You met your neighborhood-friendly mortgage team at Auxilium Mortgage. Today we're going to talk about RRSPs. That's right. Thanks to the leap year, individuals have now until February 29th this year to make their RRSP contributions, and that will count towards the deductions for your 2023 tax year. The income tax filing deadline for individual filers, just if you're a salaried employee, is basically April 13th. Now, money put aside in an RRSP grows on a tax-deferred basis, meaning an individual can claim a deduction on their taxable income for a contribution and pay the taxes on that amount when they withdraw it. So, for example, let's say you're a very high income earner and you're at a 50% tax bracket today. Every dollar that you have would be 50 cents would be going to taxes. However, when you retire, maybe you're going to be down to a 30% tax bracket. So that's when you would pull out the money for a lot less. Now, for this reason, basically this ideally is really good when your income, like I said, will fall to a lower tax bracket in the future. And for this very reason, RRSP contributions have the most benefit for Canadians who are high income earners, says Jason Heath. He's a certified financial planner and he's a managing director from Objective Financial Partners. According to him, the tax deduction in the very long run, if you look to retirement, is generally only beneficial if you're contributing at a relatively high tax rate and pulling the money out in the future at a relatively low tax rate, according to, like I said, Jason. Now, also, he told Global News that Canadians who make roughly less than $60,000 a year should think twice before putting their money into an RRSP. That's right. So if you're making less than $60,000, get some additional advice to see if this is going to make any sense for you. Now, the annual RRSP contribution limit for 2023 tax year, the one that you'll be filing very shortly, is capped at 18% of earned income for the year. Previous, up to a maximum $30,780. So what does that mean? It means that if you earn $171,000 a year, if you're one of those lucky souls, then your maximum you can contribute is $30,780. Obviously, less than that, your contribution room drops. Now, the other good thing is that any contributions that you have not made in previous years, they're carried forward. That's right. You can use them in a future year. Now, of course, we know that not everyone can afford to put away nearly a fifth of their income in savings in a year. So, Porter recommends that Canadians consider marginal tax rates at the federal and provincial levels when deciding how much to put into an RRSP to maximize benefits from a deduction. She also notes that for very high income earners, taxes can eat up a significant portion of annual earnings. By speaking to a financial planner or accountant, an individual can calculate how much they need to contribute to bring their incomes to a lower marginal tax rate. Now, the important thing to remember is that if you are looking to purchase a house and you've got money in your RSPs, well, the good news is each person who's a buyer, a purchaser on that property can pull up to $35,000 out of their RSP and use it towards the down payment. And the government gives you quite a number of years to repay that back. The other good news is that you don't have to necessarily be a first-time home buyer to qualify for this. That's right. There is a criteria you would have to check online, but I believe, if memory serves me, it's 4 or 5 years since you've lived at that primary address. If the property's been sold, you would be eligible. But again, best to double check with CRA and triple check, like I said, to make sure you're in that category. But bottom line, let's say you are a partner, a couple, and each of you has that over $35,000 in your RSPs. Well, collectively, you already have a $70,000 down payment, which is fantastic. And the best part, it's not going to get taxed. You're not going to have anything clawed back. You can use it all for your down payment, and you've got years to repay it back. So that's fantastic. Now, for those of you, let's say, who have a lot of room in your RSPs, have not taken advantage of them, what are you waiting for? Usually the answer is, well, hey, I don't have any extra cash. Fair enough. If you own property with equity in it, it may be the right move to pull some equity out of that property vis-a-vis a brand new first mortgage, a line of credit, or maybe a second mortgage, whatever it may be. At the Auxilium team, we can look into that for you and help you decide whether it's beneficial to pull that extra money out or just to leave it alone. Again, like I said, it's not the same for every individual, as the studies would say. It really varies on the amount of income you make. Some people, like I said, it makes sense for, others it doesn't. But if you can instantly put money into your RSPs, get a sizable tax break right from the outset, well, it may make sense to borrow some money for that. Bottom line, like I said, Auxilium, we're here to help. Whether it's RSPs or anything else, don't hesitate. We are your financial partners in this exercise. And while we certainly obviously specialize in mortgages, we can assist in helping you evaluate other decisions as well, and along with a team of other people that you're also going to, because again, more heads you put into a situation, the better it is. Anything else you've got mortgage-wise, don't hesitate. Hopefully this has been useful to you when it comes to RRSPs. Any other questions, reach out to our team. You can reach us toll-free, 1-855-590-6520. Email us at mortgagehelp@auxiliummortgage.com. Simply visit our website at auxiliummortgage.com. And like I said, we're always here. We're happy to help, and we look forward to helping you when you're ready.